Well, it was quite fitting that today is Groundhog's Day. For those of you that are fans of the 1990s film with Bill Murray, you'll know that it kind of repeats over and over again. And today was a repeat day. Yesterday we had a 1% surge in the stock market, and we repeated that here today with another 1% surge higher. We're not quite to all-time highs in the S&P 500, but we're knocking on the door of it. We also heard some fireworks after hours. Amazon has a major announcement in that Jeff Bezos is stepping down from the CEO role. He'll still be the chairman of the board, but a pretty interesting development there. And then we also saw Alphabet slash Google, however you want to say that, is up strongly off of their earnings announcement here tonight as well. So let's take a look at all that, see what it means for our trade application example. Then I wanted to take a look at another mega cap tech company for our trade application example today. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 2nd, 2021. First of all, if you're new, remember to go over to YouTube, click subscribe on our channel, then go down below into our description area and sign up for our email distribution list. We're also heavy users of Twitter. If you're not doing so already, I'd encourage you to follow me at Brandon Van Zee, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we have a presence over on Facebook. Feel free to join our group at that web address you see in front of you. All right, let's jump into our activity here today. And as I typically do, if we have a move of at least 1%, either up or down, I usually start our conversation off with this chart just to kind of give us a lay of the land. And since today was one of those days where the S&P 500 was up 1.39%, it qualifies. And as you can see, it's the second straight day where we've got these green bars showing up here above that blue horizontal line, which represents the 1% move area. So it's actually our third consecutive 1% move. In fact, I don't know about that day right there. We were probably awfully close. It looks like we were just shy of 1% on that candle. I was going to say we've had a pretty big string of 1% up and down moves here in the last week or so. So all of a sudden, seeing a little bit more volatility in the market. Nothing nearly as close as how volatile things were back here during the COVID-19 low point last year in the March time period. But nonetheless, it has been a little bit rockier here recently compared to a lot of this other time period here where things were a bit more quiet. Now, one of the stories coming into the month of February was the surge in the VIX. And the VIX sold off strongly here today, about 4 or 5 points, and is back down to 25 on the VIX. Now, that's still considered a reasonable VIX number. It's just nowhere close to where it was here, above the 30th area, or the 30th percentile area here just a couple of days ago. So for those of you that are newer to the markets, sometimes you'll hear people refer to the VIX as the fear gauge. Typically, the behavior you'll see is if the market goes up, like we've seen the last couple of days, the VIX will go down. It's when the stock market starts tumbling that the VIX starts going up, traditionally. And so that's not all that important for you unless you're going to end up trading options, in which case the VIX and volatility in general becomes very important to options traders. And if you need some help with your options trading, we have 3 exclusively options-related classes here at Market Scholars as well. I teach one that's pretty basic in nature, where we do a lot of put selling and some covered calls, and then David gets into the much more complicated techniques. He's an absolute master with options trading, with his directional options strategies class that he taught earlier today, and then tomorrow he'll be teaching his advanced options inventory trading class. So if you need some assistance with that, check out our membership programs here at Market Scholars. But anyway, solid day for the overall markets there. VIX dropping strongly, second straight 1% up day. In terms of the market breadth, I usually like to check in on that as well on these types of days. So I'm going to come over here to the Market Watch Visualize area. And once I'm here, I'm going to switch it from the heat map on over here to Index Watch. And then I'm going to switch the watch list here to the S&P 500, which every user should have of the platform here, of the Thinkorswim platform. Hang on a second, I got to find it. There it is. And so as we pull up the S&P 500, you can see it was a very strong breadth day. It was kind of like a 80% up day type of a day here, where we had over 400 of the 500 stocks in the S&P 500 advancing, in other words, closing positive, with just around 100 that were on the downside of the market. So a very strong advance there to the degree of about 75% or 80% of the names in the market today closing positive. So generally a positive sign when you see that. You want to see the whole army advancing, not just the generals themselves, right? We had a time period where it was just the generals that seemed to be marching forward. Among those is a company that I mentioned earlier, Google, which produced its earnings here this evening, and Wall Street is cheering on. You can see this stock was up $26 in the regular session today, but that's nothing compared to what's happening after hours. It closed the session at $19.19. At this exact moment in time in after hours trading, it's trading at about $2,061. So for those of you that are part of my Monday top-down trend trading class, you'll know that we are cheerleading this one on. This one, similar to what I mentioned to you guys last week with Microsoft, they both are quite similar in nature, in that they're both kind of the mega cap, technology-oriented types of companies that kind of sat out a little bit of this rally that we saw more recently in comparison to a lot of the other more high-octane growth stocks. But all of a sudden, both Microsoft and Google/Alphabet are both rallying to all-time highs here again. And so kind of that mega cap move is kind of back on here, it appears. So anyway, we'll see where that ends up tomorrow, but at this moment in time, it looks like it's going to be easily all-time highs for Alphabet here tomorrow. Should be a big rally, should help a lot of those technology-oriented themes that we see out there. And like I mentioned before with Amazon, since we're over here, we might as well check the quote on Amazon. And at this moment in time, Amazon is actually up. That might, be surprising to a few folks, considering the news where, Jeff Bezos is not going to be the CEO anymore. By the way, I read a great book on that once upon a time called The Everything Store. So if you ever want to kind of learn of the corporate history of Amazon, you might want to check out that book. But anyway, it's been one of the true success stories of our generation, and it likely would not have happened without Jeff Bezos. And so the market is taking it in stride, the fact that he's stepping down. Now, again, he's not stepping completely away from the company. He's still going to be, executive chair, but, it is rather impressive that it's holding up. Now, they did report earnings as well, so I have no doubt that helped the cause. And I think it also helps that they have a fairly deep bench at Amazon, and the folks that are in line, in particular Andy Jassy, are well regarded on Wall Street as being kind of one of the core developers of the AWS side of the business. And that cloud computing portion of their business is really kind of what's driving the overall company right now, despite it being well known for its retailing arm. It's really cloud computing that is driving Amazon, just like it's largely cloud computing that continues to drive Google as well. And of course, Salesforce and other, Microsoft, all three of those major players, Microsoft, Google, Amazon, are all kind of benefiting from this move to the cloud that we've seen here over recent years. Let's go ahead and get into some basic charts now, some generalist charts. And I'm going to come over here starting with, let's go ahead and do 4B here, and have a conversation about what the postures are according to the market forecast technical indicator. Now, just like I mentioned to you guys last week, and I mentioned to you guys regularly, remember there's 200 technical indicators. There's nothing that makes the market forecast technical indicator any better or worse than the others. It's just a matter of what technical indicators are you comfortable with, but you should know that all technical indicators are going to have pros and cons associated with them. One of the things that I've mentioned to you in the past is while I respect the posture setting mechanism of the market forecast technical indicator itself, I generally am not going to get too excited about it unless there's also an equivalent breaking of support or resistance that goes along with that change in posture. So just like anything, you want lots of inputs to develop what it is that you're trying to accomplish as a trader or as an investor. So I say all that because, we've had these pink background colors showing up on the charts here recently. Remember, like most technical indicators, this one is going to have a lagging effect to it. So a lot of technical indicators are showing some weakness right now because going into the end of January, the stock market itself was falling. Remember, most technical indicators just have a couple of inputs, price and volume. And since price was recently weak, some of these technical indicators are a little bit lagging in nature, are going to pick up upon that and show you their weakness through their posture setting mechanism. So anyway, when we're looking at this, I would look at something like the NASDAQ here. It was up 1.5% today. Notice that its background color is still light pink. But when I look at that chart, it's not like I'm fearful of that chart, right? This is a chart that has not closed below its 30-day moving average since going all the way back here nearly 3 months ago on November 3rd. And so until we see a major breakdown in the price candles, I'm going to respect what I gain, the knowledge I gain out of the posture setting mechanism of the market forecast technical indicator, but I'm not going to get too gung-ho about that, right? I'm not going to go and just sell all of my bullish holdings and pour into bearish trades. If we start seeing, a broken support level, that's a little bit of a different story. Then you can get a little bit more aggressive with it. So just always want to kind of fill in the blanks there a little bit more for those of you that might be newer and asking, questions about that. So anyway, of these charts, I think the NASDAQ and the Russell 2000 are rather impressive because neither one of them closed below their rising moving average at any time in basically the last 3 months, with the exception of exactly 3 months ago. So both of those remain fairly resilient in my eyes. We're going to have a conversation tomorrow morning in my factor-based swing trading class about low size factor, which matches up very nicely here with the Russell 2000, but it's kind of back on a little bit more firm ground than it was a week ago. So maybe that's a positive sign for risk appetite here. The two charts up top, I'm not quite as enthusiastic about, simply because they spent a little bit more time below the moving average. In fact, it was kind of interesting with the Dow Jones. Notice that you had a red moving average there for 1 day, meaning that price was below a falling moving average. The very next day, the moving average started going up, so it changed back to yellow. But it's somewhat noteworthy because that's the first time we've seen even a hint of red in the moving average here on any of these charts ever since basically 3 months ago, right? We had a red moving average right there on the Dow Jones exactly 3 months ago. But other than that, there's no other red moving average on any of these 4 charts. So that was a little bit of an eye-opener right there. So there's a little bit more wear and tear taking place there in the Dow Jones Industrial Average. And so we'll see if maybe Microsoft's renewed enthusiasm from a charting perspective can maybe start helping the Dow Jones along a little bit more. But this seems to be more of a technology-oriented story. And while we do have companies like Microsoft in the Dow Jones, it's not known as a tech-oriented index the way that the NASDAQ is. So I think there's a bit more strength there out of the NASDAQ. But all these indices did very well today. Just to put a cap on it, S&P 500 up 1.39%, Dow Jones up 1.57%, the NASDAQ Composite up 1.56%, and the Russell 2000 up 1.19%. So all of them were up over 1% today, with it kind of being led higher. Basically, it was a tie today between the Dow and the NASDAQ there. All of them continue to have a weekly bearish posture, or in the case of the Dow Jones, strongly bearish because of that darker pink background color, according to the market forecast technical indicator, right? And what we're reading there for that is just simply this green line is our intermediate posture, meaning not the next few weeks, but the next few months kind of a mindset. And so just be aware that crossed below the 50th percentile there on the Dow Jones. The other charts have what's known as a weekly bearish posture. In other words, more of a kind of the way I explained it to you guys last week was, think of the clouds in the sky. You don't know if those clouds are going to develop into an actual storm or whether they're just going to blow away and we're going to see sunshine again. They're more of a warning sign than anything else. We have seen a slight dip there in the green line, just barely below the upper reversal reversal zone. So not something that we would consider extreme at this point, but just something we want to keep our eye on. But the last 2 days have certainly helped the bullish case out with the strong rallies that we've seen. Let's go ahead and take a look now at our 3 green arrows chart. And as we pull this up, reminder that the background colors on this chart now will dictate whether we have 3 green arrows, 3 red arrows, or a mix of green and red arrows. And at this moment in time, we actually have all 4 of our charts with a mix of green and red arrows. The Dow Jones just yesterday had a 3 red arrow signal, but with its rally today, it barely closed just back up and above the 30-day moving average, and therefore got that green arrow back. But it does still have 2 red arrows with the MACD and the stochastics. In fact, that's kind of the victim of all the charts. They're all kind of set up the same way, I guess you could say, because all 4 of them have price above their moving averages, earning themselves green arrows on that metric, but all 4 of them also have red arrows on both their MACD and their stochastics. So they're, while the charts are shaped slightly differently with a little bit more strength going towards the NASDAQ and the Russell 2000, all 4 of them are kind of within the vicinity of one another when you're kind of gauging them through technical analysis. All right, let's take a step over here to the internet briefly. I always like to get an opportunity to say thank you to those of you that are so loyal to this particular presentation on YouTube. It means a lot to us when you can support us, particularly on Twitter, since that's the social media outlet that David and I use the most. And I always like to say thank you to those of you that take the 5 seconds out of your day to help support this product here. So to the 109 of you that liked that the last time around, I appreciate you. Also, I will say that I'm glad I had the extended conversation with you guys regarding IFF on Thursday. I had no idea that was going to work out as well as it did. Had I known it was going to work out that well, I would have probably done something much more bullish than just simply selling a put. I would have probably been buying some calls or doing something much more aggressive there. But nonetheless, we'll take what we can get there, and it is good to see that now that's not shackled up by its arbitrageurs, that the stock has responded nicely. So anyway, great to see that one working out. Also, while we're over here, reminder that earlier today I taught my dividend growth investing class where we focused on the financial sector. If you're interested in that head-to-head matchup, you're welcome as a plus or a premium member to come up here to our trading rooms and check that out. And as I mentioned previously, David taught his directional option strategies class today as well. Tomorrow, we've got factor-based swing trading first thing in the morning. That's my class. And then later in the afternoon, David will be teaching options inventory. So lots of great stuff heading your way as always here at Market Scholars. All right, real quick on the sector selector, a reminder that we have a chart on the Thinkorswim platform. It's chart 1E for those of you that are our premium members that have gone through the most recent round of chart updates that I did here a few weeks back. And that particular chart 1E, will basically be kind of an updated version of the sector selector on a day-by-day basis. But for those of you that don't use the Thinkorswim platform that are still our clients, I still like to post the screenshot, the static screenshot of how the sector selector turned out each Friday after the market closes. And so a quick little recap of what we saw on Friday was energy retained the number 1 spot. So we've seen a lot of strength out of crude oil here recently, and that has kind of flowed through to the energy stocks themselves. So it's kind of rarefied air for that category. Remember that for much of the last 2 years, we really haven't seen energy doing well. In fact, we bought our second oil and gas stock in my Monday top-down trend trading class here just yesterday, and that was only the second oil and gas company we've bought in the last 2 years, because that particular class has a set of rules that we're looking for outperformance from a sector perspective as well. So even for us, it feels a little bit weird and uncomfortable that we now have a couple of oil and gas companies in our top-down trend trading, which is a momentum-based portfolio. We also saw a pretty big surge there in the communication stocks. Now remember, this is something I was mentioning. It's hard for me to remember if I was mentioning in this presentation or in the 5 premium classes that I teach to my market scholars along the way. But I know I mentioned it a couple of times that a couple of weeks ago there was a really impressive breakout in the communications sector, and it happened on the day when Netflix reported their earnings, and that stock just broke out in a big way, and you had Alphabet following suit immediately after that. Well, with Alphabet now breaking out once again on its own tonight with its own earnings announcement, I would have to believe that communications is going to be in a very strong position here as we look at the sector selector rankings this upcoming week as well. And then we've got materials and discretionary kind of up there near the top, with more of our defensive sectors huddling up near the bottom there. All right, let's go ahead and get back on over to the Thinkorswim platform now, and let's take a peek here at some 12 grid analysis, starting with chart 5A. And this is our asset class 12 grid. Here we go. A reminder that the background colors of these miniature 12 grid charts will tell us what is the current intermediate posture according to the market forecast technical indicator. So as you can see here, most of these charts are pink. In other words, we've got more bearish charts on the board than bullish. At least I should say more bearish postures than bullish. Because again, I think there is a distinction there. I would look at something like the SPY up here and also EEM as still being in a reasonably bullish position, up above rising moving averages. But it is true, their background color has changed to light pink, telling us that we've got a weekly bearish posture on them. Notice the difference between those two and EFA, which represents kind of the developed foreign stocks out there. So think of continental Europe and Japan and things like that. And you can see here that it's still trading it's still trading below its 30-day moving average. We know that because the moving average color is yellow in that case. So, of those kind of three different areas of equities around the globe, U.S., emerging foreign, and developed foreign, it does seem like developed foreign is the place that is relatively weak at this exact moment in time. Now remember, they can give up a little bit, and it won't be the end of the world. Another way to kind of gauge this is you'll notice there's a number to the right-hand side of these miniature 12 grids, and that will tell us what is the percentage that particular security is up over the last 3 months of these miniature charts here. And so despite the posture and a little bit more, broken support and things like that with EFA, it's still up about 19% in the last 3 months, which is still a little bit better than the S&P 500 and not quite to the level of EEM. But at this exact moment in time, I think that if I wanted to take a bearish trade on one of these, which I'm not going out of my way to do, but if I were forced to, I think I would probably focus a bit more on EFA there because it does seem like that's a little bit more substantial when you have that broken support through the moving average and the fact that we've had two really strong up days here in the market, but this still can't get above its moving average. It might very well get there tomorrow, but remember, EEM is already way off of its moving average. So I would consider the emerging markets more the leadership group right now, the developed foreign stocks a little bit of a laggard right now. In terms of some of the other charts that look interesting, Bitcoin had another promising day. It was up about 5.7%. I mentioned that here a week or so ago as well, where we're getting some of these bounces up and away from that moving average. And it looked like it was setting up as kind of a nice, bounce candidate right there. And that remains the case to this moment in time. Now, keep in mind that one of the big stories of this market has been GameStop and Wall Street bets and the Reddit community and all this kind of stuff. And it's brought in a whole different crowd of investors. And sometimes that type of behavior, that more speculative type of behavior, sometimes gets associated with Bitcoin as well, rightly or wrongly. So we've got to keep our eye on it. But right now, despite GameStop absolutely getting annihilated today, I can't remember how much it was down, but it was down a whole bunch. GME. It was down 60% on the nose here today. Wow, you don't see that very often. And that is the dangers of that speculative fervor that we saw last week. So, with some of those names kind of, getting taken out back and shot, you got to be careful with other speculative assets as well. Now, Bitcoin is kind of growing into its own maturity, so it's not to say that this has to be a death knell or anything like that. In fact, I'm kind of saying the opposite, which is the chart still looks good on Bitcoin, which is rather impressive considering kind of what's happening around it. In terms of some of these other charts here, one thing that we've all been watching is this US dollar. I mentioned a week or two ago that one of the things I'm watching out for is, are we going to have a bit of an inverted head and shoulders pattern taking place here on the dollar? And it still looks like that's a distinct possibility here. It's never going to be a textbook example of it, but you get the general sense here. Like I pointed out last week, you got your left shoulder, you got your head, you got your right shoulder, and the expectation is a breakout to the upside. And that does change my opinion. It was a month or so ago where I was saying, hey, my expectations would be a weaker dollar. And, we as technicians that are looking at charts regularly, we have to acknowledge that things change. We can go into trades and ideas with, assumptions. But it's also true that our assumptions will be proven wrong plenty of times. Get used to it. That's the life of a trader. So in this case, I would say that my mind has shifted quite a bit from where I was a month ago. When we were falling here below that moving average, I just assumed that would probably continue until it didn't. Well, we might be able to get away with saying, well, it didn't now. It's kind of, it's proving itself out here. It hasn't just been a fleeting thing, right? It's been consistently above this moving average here for the last week. In fact, it's been strong enough that you've changed the shape of the moving average. It's no longer going down, it's now going up, and price is above that moving average. So that's a rather impressive potential reversal candidate there. And that can send some reverberations through the commodities markets and foreign stocks and things like that. Right now, gold continues to struggle. Hasn't that been the case for like the last several months? It seems like I'm a broken record when I say that. We don't know what direction gold is going yet. We're waiting for a breakout. Looked like, earlier this week, maybe gold would get caught up in that enthusiasm around silver, but you can see here we are just a day later and we've gone absolutely nowhere. We continue to be in a holding pattern sideways on gold. Oil remains extremely resilient. It's really impressive. In fact, so impressive, you've got an overbought cluster signal there on USO today. Not to say that has to end this trend, but you might start seeing a slowdown in oil there compared to what we've been used to in the last 3 months, especially if this US dollar move is legit, which is starting to look more and more legit every day. We did see treasuries fall in price and interest rates themselves rise. And so the 10-year Treasury yield ended at 1.1% here today. So folks were selling off bonds. That money was flooding into risk assets like stocks. Let's take a quick peek here at the sectors now. And Sector 12 grid is going to be chart 5C for those of you that are premium members following along at home. And as we look at this, you can see it's a bit of a mixed bag, but there's probably a tilt towards the bears here in this case. The only three bullish posture charts I see on the board are financials, which, as I mentioned before, we covered today in my dividend growth investing class. We also have industrials that have that light green background, although I wouldn't get too enthusiastic about that chart. We're still trading below a falling moving average in this case, but hey, at least there's a decent little bounce there today. It was up over 2%. And then we also have real estate, which has kind of been a sneaky play here lately. Real estate was kind of in the doldrums for quite some time, but this has been a reasonably strong bounce up and out of that kind of those lower levels right there. And notice how this is working out pretty nicely for those of you that are kind of looking for those outlier moves. We've got a couple of these green dots showing up over here telling us that we had an oversold cluster signal. So for those of you brave enough to take a reversion to the mean type of a trade, you just had a heck of a move there out of real estate to the point where you actually have an overbought cluster signal now. So you don't see that happen that quickly too often. It can happen, but it's just not that it doesn't happen regularly that way. And so you've had a little bit more erratic type of pricing behavior out of the REITs here more recently. Now tech is up here in the upper right, and while we do have that light pink background telling us that we've got a weekly bearish posture, it's kind of similar to the NASDAQ in my eyes in that I think I would rather still be bullish tech than bearish tech. And the reason is we had a nice bounce up and off of that moving average. And that could fail, right? We're up at a resistance point right now. So who knows? Maybe we fail as soon as tomorrow. But right now with, some of the activity after hours, I know that technically Google is part of the communications area, but Google is kind of known as a tech-oriented company. And so usually you have a lot of those tech-supportive types of companies rally in sympathy with a name like Google that is up so much here after hours today. So that kind of leads us into our trade application example today, where I wanted to focus on the biggest of them all, the biggest of the big fish, and that is going to be Apple, the largest publicly traded company here in the United States and usually in the world. I know sometimes it kind of goes back and forth with Saudi Aramco, but these days Apple is a behemoth, and just remarkable success that it's brought to Warren Buffett and Berkshire Hathaway, who owns basically $100 billion of this one company. It's just kind of fascinating that they made such a big bet and it turned out so well for them. Anyway, Apple caught my eye today because it started bouncing. It was the apple of my eye, so to speak. Now, I wish it would have closed a little bit stronger. What I was hoping for was that it would close above yesterday's high. Didn't quite get there. Yesterday's high was 135.38. It closed basically right on 135 right here, technically 134.99. But it didn't quite, do exactly what I wanted at the end of the session today. Nonetheless, there is a clear bounce setup that's taking place here. And if you're kind of looking at that as kind of a diagonal resistance area, you could say that, it kind of broke out of that diagonal pattern right there. But it was a little bit of a weaker close, and that'll happen, right? I do these trades before the market is closed, so that way I can send the information out to all of you premium members so you can consider the trades for yourself. Gives you a slight benefit over everybody else who has to watch the free video later at night. But one of the downsides of doing those trades before the market closes is sometimes the stocks won't be, as strong or as weak as I would prefer because, sometimes there's a half an hour left in trading or what have you. So it happens that way. And I'll also say that it doesn't always have to be the end of the trade either. Remember, I had very similar comments last week or maybe it was 2 weeks ago at this point, can't remember exactly, but it was on that FTI trade, right? And I said, boy, it kind of rolled over at the end. Well, wouldn't you know, just within 48 hours, we were in and out of that trade at max gain. So anyway, sometimes markets surprise you. And what I do know is Apple does now have a bullish near-term posture. So in this case, I'm using the blue near-term line, and it is at 53 and rising at this point, and we're bouncing up and off of a rising 30-day moving average. You can see with this S&P 500 dotted gold line down below that Apple is outperforming the S&P 500 over the last 3 months of this chart. And so as long as this stock remains above that rising moving average, I've got to feel pretty good about a bullish trade. Now, the trade that I did was known as selling a bull put spread, and it is a options strategy that allows you to make money off of time decay. And if you need the trade details, again, I send that out via Telegram to all of you that are premium members. But I went out to the March time period from an expiration perspective, and you can see my break even that I have on my trade down below. So for those of you that are newer to the idea, what I'm hoping to accomplish with this trade is for Apple to stay above this blue line. As long as it does, I'm going to make money in the trade. If Apple starts to roll over and starts going down below that blue line, then I'm going to start losing money. But because of the way that the trade is set up, where you're selling one put but you're buying another, that bought put can kind of act as a hedge, so to speak. So, in a way, you have defined risk in the trade. And, for all the controversy around GameStop last week, that was the biggest problem in the situation for the hedge funds, is they didn't define their risk well enough. And with the options world, you have plenty of ability to do just that. And so with this trade, if it stays, just rallying above that moving average, I should be in good shape. If it rolls over, so be it. We're going to lose some trades, but at least I know what my worst case scenario is. So that's what I had for you here this evening. Another great day in the market, another 1% plus up day, and some exciting news after the bell with both Amazon and Google out there. So if you got value out of tonight's video, I ask one thing out of you. Simply click like for me there on Twitter. There's 4 different ways you can go about that. You can go directly to Twitter, where I have it pinned at the top of my timeline. You can check the Twitter link in the description area underneath the YouTube video itself for those of you that are on YouTube. You can also check the Twitter icon on the email that I send you, and then there's always that little Twitter widget underneath the video on the Market Scholars website. So lots of easy ways for you to help support this product for both David and myself. We thank you for checking out the video. We want to wish you all the best of success with your trades and your investments. Goodbye for now.